If you have questions on how to finance that home you have your eye on, then that's precisely what we are answering today on Property Hotline. Hello and welcome. I'm Kavita Krishnan, and with me on the show today is Karthik Jhaveri. Karthik is the Director of Transcend Consulting India Private Limited. Karthik, welcome to the show.
Thank you very much.
And let's get started with this question that's coming from Venugopal. Now, he says that he's planning to buy a home and will avail a loan for the same. His yearly income is 6 lakh rupees. How much loan is he eligible for? And very interesting question next, he says, is it better to go for a home loan with a lower base rate or with a lower margin? So he's done some homework over there.
Yeah, I know. I mean, these base rates and MCLRs have become so
confusing.
popular, and you hear it all over the place. So people are quite obviously going to be, in some sense, tuned into what's going on. But okay, so let's go back to your income. So if your income is about 6 lakhs, which is of course 50,000 rupees a month, going by a rule of thumb, you can expect to get a loan of about 20 to 25 lakhs. Now, the reason for that is very simple, that most banks would be happy to give you a loan anywhere which is 1/3 to about half of your monthly income. And typical rule of thumb again is that for every lakh of rupee of home loan that you get, the EMI is approximately about 1,000 rupees. And that's on a 15 to 20 year tenure at a rate of interest of somewhere in the range of about 9% plus or minus. So that's again, all very approximate assumptions there. But that, having said that, so you can expect about 20 to 25 lakhs. Now, the other thing is most institutions these days are going to give you loans based on the MCLR system. Okay, so you may not be in a situation to choose this thing. However, if you go to an NBFC, example HDFC Limited or Diwan Housing or some of those companies, then they will not come under the MCLR purview of the RBI, but they will be under the base rate, prime lending rate and things like that. So their formula will be based on the base rate, versus if you're with a bank, then that will be on the MCLR basis. So really depending on where you want to take your loan from, I would suggest go to the MCLR system because it's far more dynamic. As soon as the rate moves down, there would be quarterly or half-yearly revisions, typically whichever bank you're working with. And MCLR system is by far a better idea these days.
Is that really the case? Because we've seen interest rates going down.
Yes.
But that has not really been passed on to existing customers. The newer customers, of course, the ones who are taking new loans, of course, are benefiting from it, but not people who are already paying those EMIs.
So I completely agree with you. Yes, there are a lot of grievances of that order which are being, witnessed. But also understand, see, MCLR system works on a situation where the bank has to revise their rate. Now, the reason some of these rates may not be getting revised for some customers of these banks would be their sanction letter would say that the MCLR would stay at a revision of 1 year, or it would be revised at a 6 monthly or a quarterly. So now all these options are working together. Now that liberty has been given to the banks, saying that you choose your revision rate, but your loan has to be pegged to the MCLR. And when MCLR changes, give the benefit to the client. But if the bank chooses to revise only yearly, then you will have to wait for that 1 year for the revision to happen.
But you could go to the bank and ask.
Oh yes, you could certainly ask. You can make a request because the new clients are obviously getting a lower rate. So you could definitely do that. If your loan has had some sort of a pedigree, which means say 6 months time, you can also think about refinancing. I mean, that option is also open if you see a big difference and if you're in the early part of your loan.
Right. And since we are discussing home loan basics, if you could just explain what spread means as well, because a lot of viewers are confused about what that means and how that impacts their home loan interest rate.
So how the spread works is actually quite a simple formula. The MCLR is a rate which is a rate of the bank. Let's just make it very simple and say that the MCLR rate is, for example, say 8%. Now, in your sanction letter, they would say that your loan is at MCLR plus 1%. So whatever is the MCLR, your rate will be plus 1%. So if the MCLR is 7.5, your rate is 8.5. If the MCLR goes down to 7, then 7 plus 1, your rate is at 8%. And that is how it would move up on that, up or down on the scale. So
then when you actually compare apples to apples, that is if you're comparing the rates of two banks and not home finance company versus a bank.
That's right.
It makes sense for you to look at what is the spread that the bank is charging.
Absolutely.
So that's a question that you need to ask the bank. You need to ask your banker as to what is the spread that you're charging and what is the MCLR that you're giving the loan at. That will enable you to get the best deal. Right, with that, let's move on to Yogesh's question. Now, Yogesh says that he's taken a loan of 25 lakh rupees when he had a salary of 50,000 rupees a month.
Right.
He made some part payments after that and has paid 16 EMIs on this loan until now. Now his salary is increased to 75,000 rupees a month. He wants to buy another house. Will he get a home loan for the same? How much loan can he get?
See, for Yogesh now, if his salary has moved up from 50 to 75 and he's already running a loan of about 25 lakhs, so the additional loan that he would get, in my guess, would be somewhere in the range of about 7, 8, maybe 10 lakhs. You know, depending on his situation, if his expenses are not too much, maybe even 12 lakhs, but not more than that. Because again, we go by the same rule of thumb, where 1,000 rupees per lakh of loan that you've got. But because you've already got a loan, they would factor that in as well. Because your liability is not only to one bank, it is to all the banks together. Which is where you need to go back and start looking at what your financial situation is. How much money will you need for your personal expenditure? You might be having some other car loan or something else which might be running. So that will be getting deducted. And then whatever you have from there, the banks will typically allow you about 40, 50%, maybe sometimes 60% as an EMI. So all these factors will actually determine how much will you finally get. But one fundamental question here, you already have one house going in for you. What is the rush to buy another house? You might as well start creating some liquid assets. You need to do that. You cannot all the time have all the money into one asset class. You need to be into various classes so that at some point of time you have a liquidity which will work in your favor. With that liquidity, you can take advantage of many opportunities which will come by your way.
Yeah, and in fact, those liquid assets could also go towards paying off the home loan
Indeed.
that you've already taken.
Absolutely.
So you're actually, in effect, building two assets rather than building two assets and two different assets over here, which actually makes a lot of sense, right?
Correct.
It cuts down the risk.
It not only cuts down the risk, but now depending on, let's say if you start investing this thing in a mutual fund, for example, then what's happening is while your mutual fund is also growing at a much faster pace, typically say 15, 17% when you've done that investment over many years, you could actually take a good proportion of those profits and start making a prepayment. That way what happens is you've already got your capital with you, you've created your existing house which is anyways growing. From the other asset which you invest, which is your investment, you've made profits from there, your capital is still with you. That capital at a later date maybe you could use for another down payment of another property. So you could actually do multiple things, and that's where liquidity helps you. So liquidity, do not undermine it, and try and walk on a ratio of 2:1. That is to say that for every 1 rupee that you have in a fixed immovable property, you've got at least 2 rupees outside in some sort of a liquid asset. Now if you go on that ratio, that's great, and later part of life, even if you go on a 1:1, it's okay. But you've already created a lot of base and a lot of wealth for yourself.
That's a basic financial planning math over there for you. Nagaraj writes in and says that if he takes a home loan when a property is under construction and if the construction stops, are the banks liable to take any responsibility? You have a contrarian view on this. Can we hear?
Not exactly. I mean, see, what happens is bank is not going to be concerned with what's happening to your constructions. A bank has financed you. Now, of course, there is a little bit of a question mark on the bank when they financed your project in the first place, because the bank will always have done a thorough legal due diligence on the project. Now, if they have financed you and then later on something genuinely went wrong, that's nobody's fault.
You know, but Karthik, I want to call you in on that legal due diligence, and this is something that we've established in show after show, that you really can't trust the due diligence done by a bank. That is something that you need to do yourself, or get a lawyer to do it, because frankly, Yogesh asks in this question, banks are not really willing to take the responsibility if that due diligence fails.
Absolutely, because you see, ultimately they've given you the loan and you have mortgaged a part of your portfolio, which is your property, to them. And therefore, irrespective of what happens to the construction, whether it's stalled or it stops completely, you still have to pay the bank. Now, that's a double sort of a sword on you, because on one side you might be paying rent also, and the other side you have to pay your EMI. So the bank is absolutely not worried or concerned. Also, there is another angle to this whole thing. A lot of times banks, you see this thing called a pre-approved loan. So the banks have themselves given firstly money to the lender, to the developer, and on the other side they're lending money to you. So the money that you're paying, you're in effect paying the developer, the bank, and the bank is getting its money back because the bank already has an exposure with the developer. So in some sense the bank is still not going to help you if the project stalls, because their own money might be also at stake.
Yeah, but tell us this.
Yes.
Would you recommend that customers, that borrowers who are stuck in situations like this, where the bank is also a party to the agreement, and a lot of banks are getting into tripartite agreements with builders and home buyers.
Indeed.
In such cases, can you take the bank to court?
So you can't really take the bank to court here.
Along with the builder.
Yeah, along with the builder, because the mortgage contract is very, very clear. But let's say worst case scenario, if you just don't have the money, if you are paying a a rent somewhere, and if you have to pay the EMI somewhere, some point of time what will happen is your CIBIL will get messed up, but maybe you want to completely sort of stop paying the money there for some time if you need that breather. It's a very, very sort of a risky and dangerous step to take, because your CIBIL is gone, you will not get a loan again. But in the meanwhile, what's going to happen is the asset becomes an NPA, and the bank anyways cannot sell your property because there is no property to sell. I mean, what are they going to sell? If the construction is stopped, they can't sell something which is a castle in the air. So, you need to really be very, very careful and judicious about this kind of a decision or a stand. But if your circumstances are such, then, one needs to really weigh the pros and cons and then take such a decision.
So, Nagaraj, the short answer is this, that the bank will not take any responsibility.
Indeed.
If you've taken a loan from a bank, the bank ensures that you pay it back. And essentially you have to pay it back whether or not your project is completed. And that is a reality today. But like Karthik just pointed out to you, it is a stand that you would have to decide, you need to take, and something that you need to decide whether or not you really want to do that. But you need to be very, very clear that your CIBIL record will suffer. It will also hamper any chances of you getting any loans in future. Ganesh now wants to know, he says that he wants to shift his loan from his current bank HDFC to SBI. How much will he have to pay the bank for this transfer? Only the first dispersal has been made by the current bank on a pre-EMI basis. And this is something I want to ask you
yes.
also. In fact, we've heard of a lot of people trying to switch loans at this point in time.
Correct.
And they are being asked to pay an X amount of money. Is that legal? Are they supposed to be paying that fees?
Okay, so there are many dynamics playing here. So if you are within the same institution, let's put it this way, and you are trying to move from a base rate to a MCLR based loan pricing, so then there will be a certain charge to be paid. Now that charge is also quite wide and varied. It could be as low as maybe 5,000 rupees to as much as maybe 0.5%. And of course, on top of all these charges, there is a service tax element also of 15% that gets added to the fee that they're going to levy. So that is one. In this specific query, he's talking about moving from one institution to another institution. So that is what you are saying is you want to refinance your loan. Now, when you want to refinance your loan, your new lender will give the money to your old lender and you will start giving an EMI to your new lender. That's basically the mathematics on how things will work. But however, this is also sort of allowed, but this is allowed when you have at least finished typically about 6 months with the previous lender. Now in your case, you have just taken a single month's pre-EMI is what you've paid. So perhaps you may need to wait for another 5 months before you can actually move. Now when you are moving, you will not need to pay any charges because the new financier is going to pay the money to the old financier. So it's a prepayment of the old financier's loan. And prepayment charges are waived if you are actually moving from one place to the other, right? And when you go to the new lender, that new lender might charge you something as a processing fee. So that's something that you may have to pay.
Right.
And which could also be somewhere again in the range of 10,000 rupees to maybe, 0.25% plus service tax.
So let me quickly recap what you said.
Yes.
Essentially, if you are on the base rate in a bank and you want to move to the MCLR, which is a new rate within the same bank, then you would need to pay a basic processing fee, a basic fee of around 5,000 rupees to around 0.5%.
That's right.
But if you are shifting your home loan from one bank to another bank, then you do not need to pay any fees to the bank where you already have your home loan. You will have to pay processing fees in the bank that you're shifting to. Correct. Now, my question to you is this. If I'm already on the MCLR regime,
right, and
we've seen rates go down,
yes,
and my bank has reduced interest rates and I want to move to the new MCLR,
yes,
is the bank within its rights to ask me to pay a sum upfront for that?
Not necessarily. I mean, mostly that should not happen because the sanction...
Which is happening is
yes,
what we've been told.
Yeah, because the sanction letter there might say that we are going to revise your MCLR base rate on a yearly basis. We are going to reset it yearly. So if you want an effect to happen before the year gets over, then there would be a certain charge that they might want to levy. Some banks, like we said, might do it on a half-yearly basis. Some banks also do it on a quarterly basis. So different banks do it at different methodologies. So now, depending on which bank you are associated with, if they don't have this system, and if your sanction letter does not say that, and if you want an effect to happen faster, you want to move down to a lower rate, then there might be some amount of charge which might come in.
So right, so within the bank itself, if you're moving to the newer MCLR regime or a lower interest rates, banks are asking for money and do expect you to pay that fees upfront.
Correct.
Makran's query next, he says, what happens to the home loan insurance if one fully prepays a home loan before the tenure?
So what is going to happen is you've already paid the premium for your insurance policy. Now, if you have chosen to prepay the loan, the insurance would remain. For certain insurance companies, the policy itself would lapse because the cover is no more needed because the loan is already fulfilled. You may want to inform the insurance company, or your lender might inform the insurance company, whichever way it is. But there is no way you will get any refund or you will get any benefit of that. If it is a standalone product that you have taken and that you have given as a collateral to the bank, or if you have assigned it to the lender concerned, then of course your policy will continue. And if it's a regular premium, maybe you will continue to pay the premiums also. Then it becomes your choice. And if it's a fully prepaid, like a single premium policy that you would have taken, then anyway the insurance would run through its term. So it depends, but you're not going to get any additional benefit or any refund back of money if at all you are expecting. The cover will stay or cease, depending on the kind of cover you've got.
So essentially it's money that goes down the drain, but what you need to remember is during the tenure of the home loan, when you are repaying that that home loan, in case, God forbid, something happens to you, then your family is taken care of, that entire EMI, whatever is pending, is paid off, the bank gets its money, and everybody is happy. So that is one big, essentially is the reason why, we always recommend that you should be taking an insurance with that home loan.
Indeed.
Now, Ramesh wants to know whether all banks provide an overdraft home loan, and he also wants you to explain the overdraft home loan in detail.
Okay, so the first question first. Not all banks give you this overdraft home loan, as it's popularly called. There are various names that different banks use for this overdraft home loan, but this home loan is a very interesting product. What's happening here is you have a current account which is opened, A. B, you get the loan which is funded to your account. This account is then connected to your savings account. Okay, so what happens is when you are using your regular bank account or your savings account, and in some banks it is just one account which is your current account. Okay, so the money that you earn from your salary or whatever money is coming to your account is a positive balance. Your loan is a negative balance. So at the end of the day, whatever is the balance that you're holding in your account gets offset from the loan. To give you an example, you have taken a loan of 50 lakhs. So the balance on the loan is minus 50 lakhs. And for that day, end of the day, if you have 2 lakh rupees in your account, then the interest that you will pay for that particular day will be minus 50 plus 2, which is minus 48 lakhs. So you will be paying interest only on the amount which is outstanding. So that is how an overdraft home loan works.
Right, and like you said, all banks do not give overdraft home loans.
That's true.
So is there any specific eligibility criteria that you need to fulfill if you want to go in for an overdraft loan?
Not really. It's a very popular product. A lot of people use it. Some people think it's a little bit more expensive because it is priced at about 0.1 to 0.2% higher than the regular loan. But it's a fabulous loan to my opinion, because if you have any sort of float balance, let's just say very simple, you get a salary or you're getting a business income or whatever it is, you use that account and you use your home loan in a combination. At any point of time, you will always have some balance. All of us maintain some balance in our bank accounts. So why not sort of use those balances and offset our interest costs? You can save lakhs of rupees on interest. So although the loan is a slightly costlier, 1.1, 0.2% higher, on a period of 5 to 10 years, the amount of money that you save in interest is a huge multiplier. So I would really recommend that everyone goes in for these kind of smart loans.
Tell me this, Karthik, how does the tax treatment of this work? Because if I have an OD loan or an overdraft loan as it is called,
right,
and I use that money for something else other
Correct.
than repayment towards the home equity. How does the tax treatment work? Will the taxman come knocking and ask me, why did you use this money for some other reason?
And see, actually, tax-wise, you're not even affected whatsoever. The reason is very simple. If you had 2 lakh rupees in your savings account, would you really pay any tax on that? Obviously not. The interest that you would earn on that would be taxable. But this itself is a current account. So on the current account, you're not earning any interest on this account. So if you've got this 2 lakh rupees sitting in your current account and which is getting adjusted with a minus 50 or minus whatever is your home loan, then you're actually not earning anything. So there is no additional income that you're getting, and therefore there is no tax to pay on this thing. What is very interesting is that the money that you are just parking in your bank account is actually money saved, which is in turn saving lakhs of rupees of your interest over the years. So at some point of time, maybe in the 10th year, 15th year, the income tax benefit or the deduction that you get might be lesser, but that's a pleasant news because your loan is getting prepaid that much faster.
So essentially it's a home loan that works for you.
Yeah, absolutely, 100%.
Right. Let's take Naina's question next. Now she says she has a home loan of 20 lakh rupees and she wants to know if she can pledge her first house and avail loan from the bank and pay part of that home loan. Is it a good solution?
So if I've understood well, she's got one house, which is obviously without any loan. It's free of any mortgage. She wants to buy another house and she wants to take a loan on the first house to do that. Now, okay, so what you're going to do is you're going to take a loan against property. So that is what's going to happen in this case. A loan against property product is slightly higher or more costly than a direct home loan. Now, your eligibility criteria does not change, or the analysis of your financial statements does not change whatsoever, or what is known as the credit underwriting procedure of any financer. That doesn't change. So I would rather that instead of doing this, keep your first home completely free of debt. Don't put any collateral on, don't raise any loan against it. But the new property that you're going to buy, just simply use a home loan for buying the new property. This kind of a situation might actually work if you were buying a land and things like that for which there is no finance. But there are people who finance that also. Or if you are buying a property somewhere else, maybe internationally or something of that sort, where you will not get a regular bank to finance you, then in that case you can consider using a loan against property.
Just to break it down for Naina in real numbers over here.
Yes.
What would be the rate of interest that you would be getting? We are obviously looking at the rate of interest at which you get home loans.
Correct.
On the screen over there. But what is the interest that you're paying on a loan against property?
So typically home loan rates are right now in the range of 8.5% to 9%, and for a LAP, loan against property, you would pay a rate of about 10.5% to 11%. So
there you go, you're actually raising an expensive loan to pay off
Indeed.
A cheaper loan. So that really doesn't make sense. Unless, of course, like Karthik pointed out, it is some other asset like, say, land that you're trying to buy for which you're not able to get any finance. Nitin has called in from Mumbai. Nitin, what's your question?
Hello, Karthik. Hello.
Hi.
My question is, I'm trying to buy a property in Navi Mumbai, and the thing is, the conveyance deed of that building has not been done, and trying to take a loan from SBI. What they are asking for is either the conveyance deed has to be there, or means I need to get a building NOC.
So Nitin, is this a building that is ready, as in does it have a housing society, etc. in place already, which is, where do they want the NOC from?
They want the NOC from the builder itself.
Okay, from the builder itself. Does he need to furnish an NOC for that home loan? Karthik?
Okay, so now there are lots of dynamics again in this. There could be a lot of scenarios. Nitin, prima facie, yes, you need that NOC. Okay, absolutely. See, what happens is when you have a society, that society then automatically at some point of time becomes the owner of that land, and that happens when the conveyance deed is done by the builder in favor of the society. When the title of the land is passed on to the society, then it is your society who is issuing a letter or NOC or whatever it is, saying that this person is a bona fide member of this building society and he lives in so and so flat, and therefore he can be financed. Now, because you don't have a society right now, you have a builder directly, and the conveyance is obviously not done because the conveyance will have to be done to the society. So right now, if the builder is the person who holds the title to the property. Now, if you're going to take a loan, the builder has to give an NOC saying that, this is the land that I own, and at some point in time, we will issue the conveyance deed. But for now, if so-and-so person wants to take a loan, we don't have any objection against this loan being given, and we don't have an objection against this property being mortgaged, because there could be some dues that need to be paid. The society might have some dues for, this is for the other viewers as well. So this kind of an NOC is necessary. If you have a situation, and I'll cover the third scenario also, that conveyance is happening, it's a property where the conveyance is yet to happen, but the society has been formed. Even in that case, the society is fine and within their means to issue such an NOC. So if the conveyance is not done, but you have a society already, then the society can issue such a NOC also. And you will need this kind of a paper from a lender's point of view to sort of identify you as a bona fide holder of the property, and second, that you live there and therefore the loan can be given.
Right, so essentially you need that NOC in place,
Yes.
and most developers give that NOC by themselves. It's not
Indeed.
something that you need to really specifically
It's a very routine
ask for.
procedure.
Right. Also, what about if you are buying a flat in an existing society? So the
Yes.
society is made, it's an old building, say
Correct.
5 years, 10 years old.
Correct.
And you're buying it from the owner of the flat. In that case, also you need an NOC from the owner of the flat if you're taking a home loan?
You don't necessarily need the NOC because it's already a registered agreement. You can see that they can see the previous agreement. They can, and most lenders would do a 30-year or a 50-year title search. In that process itself, they would have found all these things. But if they do demand an NOC from the society, it's a very routine procedure for the NOC to be issued by such societies. So it should not be a worrisome issue. It's a very, very standard part of the
So again, it's the
procedure.
society that has to issue the NOC,
Yeah,
and not
society
the
will.
person who's selling the flat.
Yeah. The person who's selling the flat is anyways entering an agreement with you, and the bank already has that agreement, because otherwise the bank is anyways in the first place not going to start the financing procedure. So both the parties have already signed it, and the society is giving an NOC. You see, that time society and NOC becomes important because that NOC clarifies the fact that the old person who's selling the apartment has got no dues, or all his dues are cleared and settled, and therefore the property has clear title. The lender wants to make sure that there is no dispute, or there is no problem, or there is no attachment of any sort, or there is no mortgage on that property. They just want to have themselves as a clear stand, and therefore this NOC is generally issued. If you are not, by the way, if you are not taking a loan, then such NOC is also not required from the society. Two people can just
Right.
transact between themselves and do the
So
property deal.
essentially, this is part of the due diligence that the bank
Yeah.
does for itself. And like we
Absolutely.
keep telling you, if you are buying property, it is essential that you do your due diligence yourself and do not depend on the bank's due diligence. With that, of course, we come to an end of this episode of Property Hotline. Karthik, thank you very much
My
for
pleasure.
coming in and answering all those questions. And of course, any questions on real estate, send them in and we'll get them answered. Thank you for watching.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.